to the Stock Market Morning Prep video for Monday, June 2nd. Well, markets eked out a small gain. Dow Jones up 18, Nasdaq actually down 5, S&P up 3.5, and the Russell ended up down 5 as well. Very, very quiet trading. The start of the summer, so Fridays will be generally a light first hour or so, and then pretty much the day's over on light volume. But remember, the bias when there is light volume is to the upside. So usually on Fridays, markets usually continue a slow grind or a pause day. Just so you guys understand how Fridays work in the summer. Well, we continue to see the markets bid up. We continue to see the VIX breaking new lows. We continue to see complacency, and we continue to see the bonds also bid up. So somebody's gonna one of the two asset classes are right, and we don't know which one it is until one of the other shows its hand. And I mean by bonds continue to be well bid up along with equities, and that's just not sustainable. Transportation sector continues to make new highs. We have a lot of the sectors, a lot of the indices that continue to make new highs, while we have healthcare, consumer staples, utilities continue to lead the gains in the markets. So, totally painting a different picture. The markets are totally confused of what's going on, and if you really look at it, if you're sitting in front of those screens all day, you'll see, and I keep saying it, stocks are not moving. The selective handful of the high beta names, but if you look at it, if you dissect as a whole, a lot of the stocks and these sectors are not moving as well as you would see in the indices. So you have to be very selective in this market environment, and you have to be on the bullish side. So there's no question about it. You cannot be looking to short this market. As a hedge, absolutely, if you have a long book. But I would not be looking just to short the market because the markets are at these levels. They are indeed overextended. They are indeed overbought. And again, we have these extreme complacency readings that we're looking for a market correction or a pullback at any given moment. But when that happens, nobody knows. So we don't want to be looking to short the market at this time. Let's let the price action tell us which way this market's headed. And in the meantime, and it is very boring. It's no question about it. You look to find the best trade setups possible without having a stock that's overbought or basically in the stratosphere. And that's not happening right now. Stocks are still well bid up and continue to be overbought. But when you have one move in the morning, pretty much the rest of the day is done. And the markets move up, the stocks move up, they create this move up for the first hour, and then they base most of the day, and then you might get one more push up and or down at the end of the day, but that's pretty much it. And that's where we as traders have to dissect the information and capitalize from it. Now, there is a bigger move coming, and I do see this, but unfortunately I can't tell you when because I have no idea. We can't have this intermarket divergence, if you will, that continues. So at one given time, there's going to be a breaking point, and that's when we need to be ready for. So me personally, I keep the book light and just take the best setups and just try to continue to put money in the account until we can literally get pretty active when the market does decide to at least correct. I mean, now you're at this 1924 and 9 days straight up. That's lunacy to even chase price action like that. That's just crazy. That's not in my trading plan, at least. So, just a word of caution, okay? All right, let's just run right into it. No, I'm not going to give you any indicators until we see this market really start to show us some signs, because they're all pointing to lower prices here. At least most of them are. And with the video small, I don't want to take a lot of time. I'd rather dissect the indexes. All right, so we see we have the VIX here broke down from 2013 lows of 12. Now we have down to 1132. So I don't know how much further it can get without a big spike up, but until this continues to go lower, stocks are going to continue to move higher. We have the bonds. Now, bonds are showing a different picture here. I think there's a short squeeze going on in bonds. We have the crowd, which is the speculative retail crowd, heavily short bonds, which tells me as a contrarian you want to be long bonds. And we've been talking about this since we had this area here, I believe back in late March. And we said we had an inverted head and shoulders, and right now it's holding true. And as you can see, we have the 1272 extension target here, and of course the 1618, which coincides nicely with the Head and Shoulders target of 142.27. So if bonds continue to move up, when is the equity market's going to say, hey, wait a minute, something's not right here, right? So that's the problem that I'm having to dive in and continually buying stocks. At least for a swing trade, I would definitely not be doing. As a day trade, that's what I'm looking to do. But as swing trades, I would not be looking to hold too many longs with this market at these levels. Only because, again, you can open up down 20, 30 handles, and that'd be the start of a new correction. So nobody knows. Japanese yen. Now, what's been fueling the market really is the yen. Bank of Japan started talking down their currency. I've mentioned this many times in the morning call video right here. They look for a breakout, and don't forget, they do monitor what the markets are doing, and they did see the Bank of Japan saw the yen breaking out of this consolidation. They see the same thing that we see, and they thought that this would have probably made a big move up, and they're trying to talk down the currency. Did a great job doing it. We rallied for 4 days, and now we're breaking down again. If the yen breaks down further, you're going to see higher prices in equities, no question about it. Okay. Let's take a look at the ES. Now, ES has made 2 extensions, and this is why, I get by the way, it's a perfect example. I get a couple of, Mark, are you really bearish in the market? No, not at all. I love the weekly charts of all of the indices, and I think we close higher at the end of the year. I just don't want to be looking to chase stocks at double extensions. At one point in time, it will happen where the markets will come in, and even if it came in 15%, you're still looking at 1585, which is still bullish, and that's a big 15%. I'm lucky if you get an 8% correction if that were to happen. Remember, we're over 30 days without a 10% correction. That's lunacy. That's just crazy, and that's where what happens when we do get that correction, when it does come, and I don't know when. That's when you're going to see the market sell off really hard because everybody is long, and they're all long up in here. So what happens now? We took out the S&P, took out the 1900, ran the stops up at 19.5, took out the stops at 10 and 15, and now we're at 18, and actually trading at the high of 24.25. How many more stops are left? That's the problem. How many more buyers do they really come in after you ran all the stops from 1900, actually from down here? How many more buyers are going to hold this market that's going to be sustainable? That's my problem, and that's where I will continue to be long, meaning the trend is your friend, so I'm going to continue to look for long trade setups, and I will look to short relative weakness to what the market is doing for that day. But I'm not going to be heavily aggressive at these levels until we get a decent pullback, Okay, transports. Again, we talked about this. Not sustainable. At one point in time, we're way above the 8 even, which is a momentum index. A momentum moving average. And you could see why, because it hugs price. When price gets way away from that, it's going to come in. It's only a matter of time, and I wouldn't doubt it if it came in this week to the 8 and then, of course, the 20. So even if you wanted to buy the transports, let it come down to this area here before looking to dissect. And if you looked at the big ones, the UNPs, the FedEx, the UPSs, they're way extended, and they also need a pullback as well. Okay, and that's why I'm just being heavily cautious. Now, IWM, the weakest link of the 5 indices, absolutely bearish. You could see it, but it does look like it's sporting some sort of a bull flag here. So it could look for higher prices. Now, remember, it needs a lot of work than the other indices here, but you could see a bull flag pattern here. But we have a lot of confluence area of resistance up in here. We have a horizontal trend line. You got 2 uptrend lines from the November 2012 lows. So we have plenty of room to the upside if it wants to break out. But there's a lot of work that needs to be done. So again, all on low volume. So just a word of caution. And last is the Qs. Again, up 9 days. Today will be 9 days up if it were to, but at least we locked in 8 straight trading days. So to me, I would be very cautious, guys, in this marketplace. However, we need to make money. So look for stocks that have been basing, and that's what I've been doing, really, looking for stocks that have been basing, that either had its bad news, had its downgrade, sold off hard, and now looking to base. And those are the stocks that I think that will come next if this market continues to be bid up. Okay, but if you have healthcare, you have utilities and staples, consumer staples, money flowing into that, money flowing into bonds, how much money's left to push the stocks up is what I'm saying. Okay, so just use the word of caution. Don't fight the trend. The trend remains up. Let's stick to the trend until this market can really start to correct, and that's when we will really start to get aggressive here. Remember, it's only a matter of time, and I do see markets really starting to pick up in volatility. It just can't. I mean, VIX can't go. I guess VIX can go to 8, but who knows? When you get down to these real high complacency levels, you do get a wake up call in the marketplace for at least 2 or 3 days, and then we will reevaluate again. All right, guys, have a great day. We'll speak to you tomorrow. Take care.